Hello and welcome to the weekly market analysis. This segment will explore the performance of Indian equity markets during the trading week of November 24th to 28th, 2025. The market saw continued volatility after reaching record highs influenced by global signals, domestic data releases, and persistent FII outflows. The video will delve into the key drivers of this week's market movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian stock market witnessed a week of consolidation after scaling record highs. The benchmark Sensex, after reaching a record high, ended the week with a 0.56% gain, closing at 85,706.67. The Nifty 50 also touched an all-time high before closing at 26,204.85, up 0.61% for the week. This modest performance reflects cautious sentiment amid record highs and mixed global cues. Mid-cap and small-cap indices showed mixed performance, with mid-cap index gaining about 2% for the month, while the small-cap index retreated 3% over the month, indicating a selective risk appetite among investors. The market remained on a buy-on-dip strategy, supported by improving demand outlook and resilient domestic outflows. Several critical factors influenced investor sentiment in this past week. India's Q2 FY26 GDP growth surprised the street, soaring to 8.2%, the fastest expansion in 6 quarters. This was a major domestic positive, supported by a resilient rural economy and government spending. Global cues provided mixed signals. Inconclusive US employment data and mixed messages from the Federal Reserve regarding the timing of rate cuts weighed on sentiment. FIIs remained net sellers, pulling out a significant amount of equities during the week. This was partially offset by continued support from DIIs, who acted as a stabilizing counterforce. The Indian rupee hit a record low against the US dollar during the week, adding to market uncertainty. However, hopes of the progress on US India trade talks provided same short-term optimism. Sectoral performances reflected a cautious rotation within the market. On the outperforming side, financials and IT sectors showed strength, driven by strong quarterly results and positive earning reports. The IT index was the top weekly gainer, advancing 1.5% at the start of the week. Select auto and services names could find support. Conversely, sectors like metals, realty, and PSU Bank came under pressure after their sharp declines in the previous week. Healthcare, MNC, and oil and gas sectors also saw some weakness. Reliance Industries and Max Healthcare delivered strong operational and earnings performances, respectively. Among the losers were Tata Steel and Bharat Electronics. From a technical standpoint, the market entered a consolidation phase after touching record highs. Technical indicators for the Nifty 50, including its positioning above key EMAs, suggest an ongoing uptrend with support at 25,750 to 26,000 and resistance at 26,300. However, the spike in volatility indicated by India VIX suggests increasing uncertainty. The Bank Nifty also remained bullish with support at 58,500 and resistance at 59,300. Analysts advise maintaining a buy on dip strategy through caution is warranted, especially with potential negative triggers like rupee weakness and FII selling pressure. Key data outflows include India's IIP and fiscal deficit, and US PCE inflation and GDP estimates will be crucial in shaping market sentiment next week. The analysis is based on information available as of November 28, 2025, and market conditions are subject to rapid change. Investors are advised to consult with a financial advisor before making any investment decisions. Thank you for joining us for this week's in-depth market update. Stay informed, stay cautious, and we will be back next week to continue our analysis of the market movements.